Hello, student. I, Dr. Shafali Jain, Assistant Professor, Tirthankar Mahavir University. Student, today discuss about block fifth concept of revenue. Revenue, in simple words, is the amount that a firm receives from the sale of the output. According to Professor Dule, the revenue of a firm is its sales, receipts or income. It means revenue अगर साधारण शब्दों में कहा जाए तो एक अमाउंट है दैट अ फर्म रिसीव जो एक फर्म रिसीव करती है प्राप्त करती है अपने आउटपुट को सेल करके। इसी प्रकार प्रोफेसर डुले ने कहा है कि रेवेन्यू जो है एक फर्म का इट सेल्स रिसीव अपनी सेल को अपने आउटपुट को सेल करके प्राप्त रिसीप्ट है और इनकम भी है। In another word, in the simple words, we can say revenue is the earning that the enterprise has from its normal business pursuit, usually from the sale of commodities and service to the consumer. Revenue is also mentioned the referred as uh, to as turnover or sales. A few companies get revenue from royalties, other fees or interest. And enterprise believes that it can sell as many quantities of the commodity as it requires by setting a cost price less than or equivalent to the cost price. In such a case, there is no logic to set a cost price lower than the market cost price. In other words, the enterprise should sell some amount of the commodity so that the cost price it sets is exactly equivalent to the market cost price. So, it can be said that revenue is the earning. रेवेन्यू एक अर्निंग है एक रिसीव्ड है जो इंटरप्राइजेस के द्वारा नॉर्मल बिजनेस में प्राप्त की जाती है और मेनली जो रेवेन्यू होता है अगर वो जो वो प्रोड्यूसर के द्वारा जो कॉस्ट लगाई जाती है अधिक अगर वो उससे ऊपर रहता है तो उन्हें बेनिफिट होता है और अगर वो उससे नीचे रहता है तो जो प्रोड्यूसर होते हैं उनको इससे लॉस होता है सो वी कैन से दैट रेवेन्यू इज द अमाउंट दैट अ फर्म रिसीव फ्रॉम द सेल ऑफ द production of the output. So I think you have to understood what is the concept of the revenue. Basically, revenue is calculated by multiplying the price P of the goods by the quantity produced and sold Q. You can get the revenue with it. So in a firm, revenue of three types. Revenue types total, average and marginal revenue. Revenue types total. The terms revenue refers to the income obtained by a firm through the sale of goods at different price. In the words of Dule, the revenue of a firm is its sales received or income. So the revenue concept are concerned with total revenue, average revenue and the marginal revenue. Now we discuss about the total revenue. Total revenue, the income earned by a seller or producer after selling the output is called the total revenue. It means uh, वो आय वो इनकम जो एक सेलर और प्रोड्यूसर को प्राप्त होती है अपने टोटल आउटपुट को बेचकर आउटपुट को सेल करके जो भी इनकम प्राप्त होती है उसे टोटल रेवेन्यू कहा जाता है इनफैक्ट टोटल रेवेन्यू इज द मल्टीप्लाई ऑफ प्राइस एंड आउटपुट यू कैन गेट टोटल रेवेन्यू प्राइस और आउटपुट को मल्टीप्लाई करके गेन कर सकते हो द बिहेवियर ऑफ द टोटल रेवेन्यू डिपेंड ऑन द मार्केट where the price produce or sale. So the total revenue is the sum of all sales received or income of our firms according to Dooley. We have also explained the definitions of the Dooley. So total revenue may be defined as the product of planned sales, yani, sales output and expected selling price. Clover and ड्यू according to Clover and ड्यू जो टोटल रेवेन्यू है उसको गेन किया जा सकता है जो टोटल प्लांट सेल आउटपुट और एक्सपेक्टेड प्राइस को मल्टीप्लाई करके वी कैन गेट टोटल रेवेन्यू. So it is simple. The total revenue of our firms is the amount received from the sale of the output. Therefore, the total revenue depends on the price per unit of output and the number of units sold. So, total revenue is the total received a seller can obtain from selling goods or services to buyers. It can be written as P multiply Q, which is the price of goods multiplied by the quantity of the sold goods. Now you see here the formulas. Uh, टोनियर और हैग के अनुसार टोटल रेवेन्यू एट एनी आउटपुट इज इक्वल टू प्राइस per unit multiplied by the quantity sold. Thus, we see here the formula TR is equal to AP multiply Q. TR total revenue, AP average revenue यानी price per unit, Q output. For example, if the price of a commodity suppose 100 rupees, then the total revenue, then the total units sold 20. In that case, revenue will be total revenue 100 price and the output 20. So total revenue between 2000 because total revenue will get AP multiply Q. So per unit price is 100 and 20 units are sold. So total revenue would be 2000. Now we see an example here. Suppose output 1, price 200 and then total revenue would be 200 multiply what? 200. Output 2. 2 output units 2. So price here also same 200. So 200 multiplied to 400. Total revenue will be 400. And when the output units 3. Price 200. Now total revenue get 200 multiply 3, 600. Now output units become 4. Then price is also 200. Price is same in the all increasing the output and total revenue will be 800. When output become 5, price 200 and total revenue will be become 1000. Now as an example, total revenue when two radios, suppose two radios are produced and sold it. Now you can find out TR Q कितनी 2 price कितना 200. So now total revenue will be 400. It should now be clear to you that the total revenue that a firm received is determined by the quantity of the product sold and the price per unit of the product. In the above example, notice that the price per radio remain the same at all level. जो प्राइस था रेडियो का वो ऑलवेज सेम रखा और जो लेवल और आउटपुट है वो 1 by 1 बढ़ता गया. It is only one type of market situation where a firm can sell any quantity at a given price. In actual life, we come across another market situation in which if a firm want to sell more, it must reduce the price. If in the present time, yeah, imperfect market, you can say when the supply of the goods has become larger, then the producer reduce the price. If he want to sell more supply, more output, and सो द फर्म मस्ट यदि जो प्रोड्यूसर है वो ज्यादा सप्लाई को सेल करना चाहता है ज्यादा आउटपुट को सेल करना चाहता है तो वो प्राइसेस को रिड्यूस कर देता है. द फर्म मस्ट induce the buyers to buy more. Reduced price of a product is generally a big temptation for our buyers. You see a practice that if you want to buy anything in bulk in the market, you can bargain for a lower price. यदि तुम बहुत बड़ी क्वांटिटी में बल्क में कोई चीज मार्केट में बेचना चाहते हो तो you have to do lower price. This behavior is not strange. You have learned in this lesson on demand that consumer normally demand more only at a lower price, and the law of demand is also say that price and demand has a inverse relationship. When the price increases, demand decrease. When the price decreases, demand increase. For example, if you want to purchase four fans you for your new house, the shopkeeper may give you a discount. He may charge a price lower than what would have charged if you were to buy only one fan. It is also normally seen in the present life. Whereas the market situation, the method of calculation of total revenue or any other measure of revenue remain the same. For example, consider here. Suppose uh, the output is suppose the price is different here. Suppose the output one price is 100. Now total revenue would be 100. When the output becomes 2 units and the price become down, it become 90 rupees. Then the total revenue 90 multiplied to 180. When the output become 3 units and the price become reduced and it become 80. Now total revenue 240. 80 multiplied 3. When the output units increase 4 and the price of the output becomes 70, then total revenue will become 280. And when the become output unit become 5 and the price becomes 60, now the total revenue will become 300. And when increase output units become 6 and the price is also down 50, 300. So and when the output becomes 7 and price become less and 40, now 280. So the method of calculation TR is same. The difference arises only in the successive additions to TR. When price is the same at all the level of output, when you see the successive addition total revenue on account of increase in output is also the same. When prices fall, as output level increase, the successive addition to TR also fall. इफ इट मीन्स यदि प्राइस सेम रहती हैं तो टोटल रेवेन्यू बढ़ता रहता है, लेकिन जैसे जैसे आउटपुट यूनिट्स बढ़ रहे हैं प्राइस डाउन होते रहते हैं तो टोटल रेवेन्यू सक्सेसिव एडिशन टोटल रेवेन्यू जो है जैसे जैसे सक्सेसिव एडिशन जैसे जैसे आउटपुट बढ़ता रहता है और टोटल रेवेन्यू कम होता रहता है अगर प्राइस भी फॉल होते रहते हैं. जैसे जैसे आउटपुट लेवल इंक्रीज होते हैं उससे प्राइस अगर फॉल होते रहते हैं तो टोटल रेवेन्यू भी फॉल होता रहता है. नाउ आई होप यू हैव टू अंडरस्टूड व्हाट इज द टोटल रेवेन्यू. नाउ वी डिस्कस अबाउट द एवरेज रेवेन्यू. Average revenue refers to the revenue obtained by the seller by selling the per unit commodity. It is also say per unit commodity price. It is obtained by dividing the total revenue by total output. You can average revenue क्या है? औसत एवरेज यानी औसत. औसत रेवेन्यू को वैसे बेसिकली हिंदी में राजस्व कहते हैं, लेकिन एवरेज रेवेन्यू एक तरह से obtain किया जा सकता है सेलर डिवाइडिंग टोटल रेवेन्यू बाय टोटल आउटपुट. The average revenue curves show that the price of the firm's product is the same at the each level of output. स्टोनियर और हक के अनुसार ये डेफिनेशन दी गई है. As you see, AR average revenue is a total revenue divided by the output. AR average revenue, TR total revenue, and Q output. Output quantity. So according to MC Donald's, average revenue is the per unit revenue received from the sale of one unit of a commodity. So total revenue, as I also discussed, TR, price multiply output. Now, so P is the function of output, is an average curve. We show that price is a function of the quantity demanded. It is also demand curve. Now you see in the schedule here output and sales 1, 2, 3, 4, 5 per price 200, 200, 200, and total revenue will be gain 200 multiply 1, 200, 200 multiply 2, 400, 200 multiply 3, 600, 200 multiply 4, 800, 200 multiply 5, 1000. Now average revenue 200 divided 1, 200, 400 divided 2, yani means total revenue divided by output. And so you can say that average revenue per unit cost, it is same and it is same. So AR TR upon Q, and price at 200 is also price of radio. You will notice in the table that AR, average revenue, and the price at the each level of output are the same. Normally a producer says all the units of the commodity per unit of the time at the same price, therefore his average revenue also the same as price. We can show this in the following manners. Student, hope you understood well what is the total revenue, what is the average revenue. So we can say that the average revenue is the per unit. Average revenue is simply the total amount of revenue received received divided sorry excuse me, received divided by total quantity of goods sold. In perfect competition, we also study about the perfect competition, but here I also explained what is the perfect competition in brief. Perfect competition is a market where a homogeneous goods is sold, a homogeneous product is sold, and seller and a large number of buyers and seller and buyers have a perfect knowledge about the market, and no transport cost. So, in a perfect competition, marginal revenue is most often equal to average revenue because the product is homogeneous, and no firms can determine the price, and the firm and the market is a price taker, not price maker. This is because the collective market force make each participant a price taker. For example, the market may dictate that it is not profitable to sell a good below 10. So, charging more than 10 per unit puts a company at a disadvantage to other companies selling at that price. But it an imperfect competition, marginal revenue and average revenue will vary. In the further video, we also discuss about the imperfect competition. In the imperfect competition, monopolistic competition, oligopoly, many markets come in. This is because a firm must have lower its price to sell additional units. Both marginal and average revenue tend to be downward sloping, with the marginal revenue often being the steeper to the two lines considered. And uh, I think you have to understood what is the uh, total and average revenue, and further we discuss about it in the further videos in the perfect market and imperfect market. We also discuss it. Now we discuss about the marginal revenue. Marginal revenue, as you are already familiar with the concept of marginal cost. Marginal revenue is also defined in the same manner. It is marginal, where the marginal word is used, it's a additional to TR. When sales increase by 1 unit, it's termed as marginal revenue. As an illustration, consider the following tables. Here, price, output, total revenue, and marginal revenue of a firm producing reduce. Suppose the output, in the simple words, marginal revenue is the increase in revenue that result from the sale of one additional unit of output. While marginal revenue can remain constant over a certain level of output, it follows the law of diminishing returns and will slow down on as the output level increases. Uh, in economic theory, perfect competition firm continue producing output until marginal revenue equal marginal cost, because in the perfect competition I have also discussed that the price, the product is homogeneous and the price is constant. So marginal revenue refers to the incremental change in the earning resulting from the sale of one additional unit. Analyzing marginal revenue helps a company identify the revenue generated from each additional unit sold. So, marginal revenue is often shown graphically as a downward sloping line. And when we are also discussing the relationship between marginal revenue, average revenue, total revenue, we also show the graph representing how a company usually has a decrease its price to drive additional sale. We can also understood in this table how we can find out the marginal revenue. In this table, TR sales of reduce per year reduce prices is 200. TR from the sales of two radios is 400. Therefore, MR when two radios are sold, then uh, are sold TR of two radius, TR of one radius. Then you can get additional revenue. Suppose one unit output price 200, TR 200, and marginal revenue is 0 because it is also 200 because it is not first unit. Now when second unit price is 200, total revenue 400, and additional also 200 because 400 minus subtract 200, 200. Output 3, when the price is same, marginal revenue will be constant 200, and total revenue increase to 600, and 600 subtract 400, 200. Then output 4, price is 200 and total revenue 400, 4 multiplied 200, 800, and 800 subtract 600, marginal revenue again 200. On the 5 output 5 units, price is same 200, and total revenue 1000, and 1000 subtract 800, 200, and output unit 6, price is 200, TR also 1200, and 1200 minus 1000 is the marginal revenue is the same 200. In the table, TR from sale of one radio is rate 200, TR from the sale of two radios is rate 400. Therefore, MR when the two radios are done, TR of two radios minus TR of one radio, and it becomes 200. By increasing his sale of radios by one unit, the producer is able to increase his TR by 200 rupees. Such an increasing TR from the sale of an additional unit of output is the marginal revenue. So, businesses, analyst, and inventor can use the total and marginal revenue to determine the competitiveness and success of the companies. Both of these types of revenue have a direct relationship to corporate income. Companies that are successful often have consistent total and marginal revenue. In order to remain competitive, companies must be able and willing to increase production, but only to certain extent. Since we already know that reaching optimal levels can lead to a drop in returns, companies must regularly monitor production level, and a cost benefit analysis is the usually required once their marginal product cost begin to exceed their marginal revenue. So, company's revenue is what it's earned from selling commodities and services to the consumers, which are its normal business pursuit. It is called turnover or sales. Royalties, fees, and interest may also be a source of revenue. By setting a cost price less than or equivalent to the market cost price, and enterprise believes it can sell as many quantities of its product as it needs. The rationale for lowering the cost price of a product is lost in such a scenario. As a result, the enterprise should set a cost price that matches the market price of the commodity to the greatest extent possible. So I think in this video you understood the total revenue. Total revenue, the total amount a vendor can collect from the sale of the commodities or services to the customer. The price of commodities can be expressed as P multiply Q, which means the cost price of commodities multiplied by the amount sold. Therefore, total revenue is defined as the market cost price of the commodity multiplied by the enterprise output. And I also study average revenue. In brief, the average revenue represent the revenue initiated per unit of output sold. The average revenue contributes greatly to the profit of any enterprise. In calculating profit per unit, the average cost is subtracted from the average revenue. It usually more profitable for an enterprise to manufacture the greatest amount of output. Just like a marginal revenue, we also explain it. It is defined as the revenue earned from the sale of a new product or unit. In other words, it is the revenue that a company generates when it sells an extra units. Management uses it to analyze customer demands, plan the production schedules, and save and set the prices of product. In accordance with the law of diminishing returns, the margin of the revenue remains constant to a certain output level and slows down as output increases. So, in this video, we discuss about what is the total revenue, what is the average revenue, and what is the marginal revenue. And we also discuss it with the table and example. Hope student you understood it well. Thank you. Thank you very much.